Hello everyone, this is Victor Riesco. This is a market update for July 14th, 2025. So let's take a look at the technicals in the market and see where the opportunities lies for this week and what are also the potential risks out there. So we're going to start on the video, looking at the trends. And right now, all market trends of the most important ETFs, indices I follow are in an uptrend. Recently, the Russell 2000 um, switched to a long-term uptrend. So basically, everything S&P 500, Nasdaq, Russell 2000, gold, Bitcoin, high-yield bonds, they're all in a long-term uptrend and short-term uptrend. So really doesn't get much more bullish than that. And also, we had a very good week for Bitcoin. If we check that out, we'll see that let's look at the chart right here. Bitcoin had a breakout to new highs. This is pre-market, actually reaching a new high around 70 using IBIT, the iShares Bitcoin Trust as a proxy. Um, but right now, I mean, it's great. Who knows where this will end? It looks a bit parabolic right now, but knowing Bitcoin, it can probably go quite a bit further. But right now, I don't see that this is a good entry point whatsoever. If we look down here, the short-term uptrends turned bullish right here. That was June 25th. So right here, the risk reward was a lot better, and you could have entered and have a really tight stop to control your risk. Right now, it's basically gone parabolic the last few days. So if you're long, that's great. But I wouldn't be chasing here right now and just enjoy the gains and protect them if you're long. Um, let's see what happens. Let's see if this keeps on going, or maybe we can get some type of a consolidation or pullback in the next few sessions, which would allow us to maybe get a secondary entry. So that's something I'll be tracking. Um, the Russell 2000, which was the index that recently switched bullish here on July the 2nd. Uh, it's been usually a very disappointing index. It doesn't when it seems that it's gonna get going, it doesn't really get going, and a lot of false moves. But it looks pretty constructive now. It's pulling back a bit here to this 2020 area, which was a previous zone of resistance and support. So we might see some stabilization here. If not, maybe it pulls back around to this 200-day moving average and previous high of it reached here in June. But it's bullish now long term, you see, and in the short term. So it might give a pullback entry in the next few sessions. So that's one area I'll be monitoring. Um, the rest of the market, very bullish. Just the major indices, the SPY and the Nasdaq, pulling back a bit. The last few sessions, consolidating here after this move higher, or at new highs, but overall looks constructive. Maybe it's a bit of a break after this, sharp move higher after the Iran situation de-escalated, and I think right now it just looks like a consolidation at new highs. So uh, constructive action in the indices. It's pre-market, it's pulling back a bit. So let's see how this 620 area holds. If this breaks, maybe in this 5, we could see 613 or 605 as probably new support zones. So we'll see, but trend-wise, everything looks pretty bullish and constructive. Now, taking a look at breadth, also all measures in the long, midterm, and short term are bullish. Only a bit of a concern is the short-term breadth indicator, which is still in a bullish condition, but has been weakening quite a bit, especially the last week. But still at a bullish level, but it could switch to a short-term negative in the next sessions if we see more market weakness. Well, let's take a look at that. So here's the long-term bullish breadth. You see that basically when the green line is over the red, it's bullish, and vice versa. So we're clearly a lot of green over the red, so long-term breadth looks positive. It's pulled back a bit the last sessions, but overall long-term looks very positive and suggests that we should keep moving higher in the market. Also, the here in the top pane, the midterm breadth. Also, we flipped back to bullish here in early May and remained so. Also, signaling a constructive breadth environment for further gains. As I mentioned, short-term breadth. We reached an overbought condition here on July 2nd. Sorry, July 3rd. And when we reach these overbought conditions, it's normal to see the market consolidate or even pull back a bit. We see that the index doesn't really pull back, but breadth-wise, we've seen some pullback, and that's basically because of rotation and some sectors have taken a hit the last few sessions. For example, software has fallen quite a bit the last few sessions. Also, for example, consumer staples had a rough week last week. So there's some sectors that are pulling back, but overall the leading sectors are holding on well, and this is just seems like a just normal pullback consolidation after an extended move. Now looking at the sectors, these sectors are ranked by relative strength in different time frames and adjusted by volatility. But what do we see? That aggressive sectors continue to lead. Number one sectors, high beta, then semiconductors, ARC, innovation, industrials, technology, Nasdaq, growth, S&P 500, Bitcoin, Max 7. Basically all the most, not all, but most of the aggressive sectors are leading, and the laggards are actually the safe sectors: low volatility, real estate, consumer staples, healthcare, long-term treasuries. So just by looking at this, you see that's a risk-on picture. Most sectors are in a long-term uptrend. Most sectors are in a short-term uptrend. Even though we had a choppy week last week, you see that a lot of aggressive sectors actually had a positive week, like high beta, semiconductors, innovation, Bitcoin up 5.36%, home builders 2%, energy, oil, biotech, and we had some weakness in normally that are some aggressive sectors like financials and communications, but also we had some weakness in consumer staples, which is a defensive sector. So all in all, if we just average all the gains and losses of the week, we still edged a slight gain. So this is also a way to look at how market is behaving. And right now, it is telling us that there's no major red flags or concerns that we could be entering a deeper pullback or a large correction. Not at the moment, even though we're having all this noise regarding tariffs and stuff like that, which used to really rattle the market back in March and April. Right now, even though we're getting a lot of headlines, we're not really getting any rotation to defensive sectors and aggressive sectors really getting hit really hard, and to be a concern that, hey, maybe the market is getting in a risk off mode. So also something which I track to see the risk appetite of the market is the VIX, and it remains below 20 and the 200 days simple moving average. Basically, when we cross above this is a sign that we could be entering a risk off risk off scenario, which we've had a couple of warnings here, but it didn't really amount to anything. And right now we're 16, which is ways below 20 and 200-day moving average. And also we're not seeing any real fear creeping the market at all. So that's also a bullish sign. This is something I've shown quite a bit, and when VIX is below 20, market tends to have a really good behavior and really contained drawdowns. And when VIX is above 20, the market has much lower return and big drawdowns. So right now we're in the green environment, so that's positive. And some trade ideas for this week. Here I have 4 ideas that are still have some time. We're in earnings season, so a lot of stocks you might see a good setup, but earnings are just a few days away, and I tend to avoid that. So I look for some stocks that are setting up well, and earnings are still have like around a month or a bit more. So let's see. The first one is ASTS, and ASTS. You see right here, it's a stock that had a really powerful run here since the beginning of June. Went up 130%, and now it pulled back to its 21-day moving average, and it's finding support here. And actually, the short-term uptrend always remained throughout all this pullback, and now we're actually seeing that momentum is coming back to the stock, and it gives you a chance to enter with a pretty tight risk reward. Maybe you could put a stop below um, these recent lows, below the 21-day moving average. And also we see, what I like about this chart is also that it has a huge up to down volume, which is right now one of the highest in all the stocks I track. So that's a good sign that this could probably move higher. Right now, the implied volatility in the stock, if you trade options, is pretty low. So it's not a really good candidate if you want to short premium, but you can trade it by with buying calls or call spreads that are relatively cheap right now. Another one that I like, this is Kroger. This is pre-market. This is basically just normal market hours. Kroger, which is a defensive stock, it already delivered earnings. Their next earnings are in September 19th, and looks very constructive. Had this huge move higher, this gap up after earnings. It pulled back to its 21-day moving average, and now we're seeing that the stock has stabilized here and established support around above 70, and we see that the short-term uptrend is still valid and momentum's back in the stock. I also like that it has a ton of accumulation, so this looks like a nice setup. And options, if you're into options, IV is also pretty low right now in Kroger, so if you want to trade it with options, going long calls or call spreads is a better option. One that I was also watching is MU, also out of earnings, pulling back to its 21-day moving average. It has decent accumulation and up to down volume, but it has had a lot of relative strength since April basically, and it's very high. It's a very powerful move of almost 100% for a stock that is not that doesn't have such a high volatility. So adjusted by volatility, it was a really good move, and it's ranking very high on relative strength. So right here we see that the short-term uptrend is valid and momentum is positive. I'm seeing pre-market that it's down quite a bit. It's down 3.4%. I don't know if that's by some news. So actually, momentum's flipping negative at the moment. But keep this in your watch list. Maybe we'll see how this results. But if this we have a reversal day from this sell-off today and momentum remains positive, it could be a good long entry. And finally, one that is looking very constructive is junior gold miners. Actually, from the gold stock sector, is that for me it looks the most constructive chart. You see gold here, and you see GDX. GDXJ looks like a better setup technically. On Friday, it switched into a new short-term uptrend with positive momentum. Here we got the signal. Pre-market, it's gaining 0.86%. I think it's still in a viable range. So this one has no earnings. So basically, gold miners have had a nice run this whole year. Now they pulled back, chopped around here on the 21-day moving average, and now it seems that momentum's coming back to the stock. So it looks like a good setup, and you could enter with a tight risk reward. Here, if you're into options, IV is a bit higher. It's around 50%. So you can use short premium strategies in this one, because IV is still relatively high, and you're gonna get some good premium selling puts or credit spreads on using puts. So this is one in my radar. So that's it. Hope you enjoyed it, and look forward to your comments and questions. Thank you.